Hey guys, it's a market update, a massive crossroads for Bitcoin traders right now. I want to talk about short term, the two opportunities that are coming up, and then longer term, what's happening with the cycle right now if you are an investor. So let's get into the Bitcoin price. The first thing is there's an FOMC meeting next week. The Fed is going to raise interest rates by 25 basis points. That's what the market expects. That's what the Fed have basically told the market. So another 25 basis points. At this point, it doesn't really matter, right? Because everything is restrictive in terms of rates. And if they're more or less restrictive, it just means that the eventual cut is going to be even larger. What the Fed are going to say at this meeting is inflation is still nominally too high, even though it is coming down. But what they're really going to say is the jobs market is too strong for us. Their entire job, the reason why they're raising interest rates, is to destroy the private sector. And they haven't destroyed it enough for their liking right now. At least in the data that's coming out, it is getting destroyed as we speak, but they want that jobs data to get worse. Once that is, and once inflation's really, really coming down, maybe even negative, then they can flip. But they need that data to come out to actually give them the cover to flip. At this point, it's just not there yet. So whether they raise or whether they pause, that doesn't really matter that much. They just want to keep everything down a little bit longer, as long as they can. So I don't think that's going to move markets. However, the ETF thing is really important. On the 13th of August, you have the ARK Invest ETF application decision date. The SEC are going to decide either to accept, reject, or push back. Now, there's been some speculation that it might get accepted because ARK have changed the application. It's exactly the same as BlackRock's. It has this surveillance sharing agreement in there. And everyone thinks, well, that's the thing that's going to let the SEC accept all of this. That may be true, but maybe not this soon, right? They just lost against in the XRP case. I believe it was a loss anyway. Maybe they're going to say they need more time to look at these surveillance sharing agreements. The fact is that it's coming with Coinbase, who they're suing, right? So for me, my opinion, I don't think they're going to accept it in August. If they do, great, we're off to the races. We will just go straight up to 35 or 40K. And so your bags are going to look great, your investment bags. However, I would just assume that they're probably going to delay it for another 90 days or whatever that delay is. And so what we're looking for here as a trade is for this to be reversed. So what we can see here is that this green candle was kind of the ETF applications and a little bit of hype on that. We have an uptrend here, which is very clear, coming into a resistance. So we've got this kind of ascending triangle or ascending wedge with this uptrend. So what you're looking for here as a bull is to go long at tests of this trend. So if you get the ETF application FUD, maybe there's some FUD and there's some selling around that, you're looking for the price to come off around this level to actually take some longs with the expectation of taking profits up at the resistance. So, a potential trade would be waiting for the price to FUD and, come down to around this level again, let's say 26 here. You'd put a stop loss somewhere around here, a rejection of the trade, and then a take profit, around the resistance level. Risk reward is decent there, somewhere around that, right? So you're looking for a continuation of a kind of a longer term uptrend, but with that FUD in between, because the ETFs will be approved, but maybe not right now. And if some people are trading the acceptance of that and it doesn't come, then they may be offside. They may have to sell out of their longs or whatever because they got in up here at a much worse price. They were hoping for the breakout, which doesn't happen. So you wait for them to capitulate and actually come in there. That would be the trade idea. You can see right now that what we're essentially doing is for the Bitcoin prices, just grinding upwards before a bull market. So that would be the trade. Also here, kind of a downside is that you are just trading and going long towards the top of this section, which, isn't great, but hey, look, there's no perfect trade, but that is an opportunity. So for Bitcoin right now, I think really you're just waiting for some FUD to actually go long. That's short-term trading. However, if you're long-term, totally different. If you're a trader though, Bybit deposit bonus, link in description, up to 30K as a deposit and trading bonus. Check the details via the link below. We're also going to look at where we are in the cycle as well. Really, it is all about unemployment. It has to weaken and then the cycle can flip back to essentially up only for most assets. And there's a reason for that, which I'll explain here. Also, if you do have the crypto investor course right now, if you're part of that, if you're a member, I'm going to be updating it very soon with way more research on this because the cycle is changing. So you need to make sure you know all about that. Bitcoin cycles coming up as well with the halving and a bunch of other research that I've got right now. I'm going to be putting that. So if you have it already, that is a free update for you. If you haven't got the course yet, check it out. It is linked in the description as well. What I want to talk about here is jobless claims and the economic cycle that we're going into. So what the Fed really wants to see is that jobless claims and unemployment rising. And that's going to kill all inflation and demand right within the economy. That's exactly what they want to do. Why do they want to destroy the economy so much? They need to bring it all in because the fiscal side is so out of hand. And we'll get to the charts right here. So as you can see, when the Fed raises rates, they are trying to destroy the private economy. And they have a 100% record of doing this because they control the money and they control the interest rate on the money. Each time, as you can see, the interest rates rise. That is trying to destroy the economy, and the jobless claims rise. So that's exactly what they want to happen. So each time we see a bottom in rates, which is here in blue at the bottom, and then the rates rise, and the Fed does that. Then it gets to a top. You can see that playing out here. Jobless claims rise as interest rates rise each and every time. So what we're seeing here as well in this cycle, the bottom of interest rates here, the bottom of, jobless claims. So a lot of people were employed. And then as we see here, interest rates climbing up to, 5% or more hasn't quite happened yet, right? So the Fed aren't going to change until that data is there. But you've seen a bottom in jobless claims in terms of they're starting to rise again. Jobless claims have been fairly robust, and so has the unemployment rate. But we're at a cyclical low, and as you can see, just is starting to rise. So if this is going to continue like every other cycle, jobless claims are going to start at least with a trend upwards. The recent data was actually fairly strong, but it's within still an uptrend for jobless claims. So more jobless claims means obviously higher unemployment over time. That's exactly what the Fed wants to see to give them the cover to flip back the other way later. But it's not there yet, right? We're just not there yet. However, as an investor, your job is to look forward 6-12 months and say, is the economic cycle going to be, worse or better than it is now? Well, it's definitely not going to be as tight as it is now in 6 to 12 months' time. So that's why you're seeing risk assets take a bid up. So another part of this is the interest rate cycle and how the fiscal deficit is growing. So you're thinking, why on earth is the S&P at near an all-time high right now? The economy's in the dust. What is happening? What is happening is currency devaluation, and that is why you must own assets. So here we can see the data. 10-year average GDP growth. In recent history, GDP growth in the States has really stumbled. You're looking around a trend rate of GDP around 1.5, 1.8, maybe 2%, as you can see here. The issue with that, as Raoul Pal says, is that GDP growth is not enough to service the debt that America has. And I'm talking about America because it's the biggest, but it's the West, many Western countries. The issue is that we can see here, the GDP growth is not fast enough to pay off the debt. So who is going to pay the debt? Debt payment comes from even more debt growth. You pay previous debt with new debt, and that's obviously unsustainable. That's a debt spiral, which the only possible outcome of is one of two things: a default, which America can't do because it prints its own money. So the second thing is the thing that happens, which is currency debasement over the long term. Now, eventually, they're going to have to return to QE. It's the only way. And they have to devalue and debase the currency. So when you're looking at assets going up in price, like how on earth is a stock's going up in price? There's no economic growth. They're going up in price because the dollar, the thing they're valued in, is going down in value. And so the only way to protect yourself is to own assets and not that dollar. Now, this is over longer term as well, right? Because cycles, obviously, we saw the dollar strengthen during cycles. I'm talking about long-term trends as an investor here. Owning the currency is essentially just being impoverished through inflation and debasement over time. Another thing about assets going up in price is that that's great for asset owners, but the only thing that means is that people that can't afford assets, like houses or stocks or anything else, those assets are going up in price. It's essentially making them more unaffordable over time, right? So it's not that asset prices are going up and everyone's getting rich. Actually, most people don't own assets. And so what's happening is people are just getting made poorer. which is why I think Bitcoin is great, because you can buy $10 of it, $50 of it. You don't have to spend thousands of dollars. You don't need a bank account. Anyway, let's not get into that, but this is important, right? The debt is unsustainable. The only way to pay it off is larger and larger fiscal deficits, which are actually a stimulus to the economy. Fiscal deficit is a stimulus to the economy with more debt over time, requiring more debt. And the only way to actually pay that off is to have interest rates below GDP growth. And eventually that means printing money to buy your own debt. So currency debasement and assets go up in price. Bitcoin and crypto may not be for all investors. Maybe they prefer real estate or stocks or anything else, but this cycle is occurring. And so to actually take advantage of it, you need to invest in things that are growing over time. The reason why the S&P is yielding 8% a year is because that's how much more or less the currency is being debased. It's actually got no growth. You can see US growth is basically 1.5%. So if US GDP is around 1.5%, an investment in the S&P 500 is an investment in the US economy. So they're growing around 1.5%, right? Because you're just getting broad exposure to economic growth. So you're getting 1.5%. Why does the stock market go up on average around 8 to 10% a year? The rest is currency debasement. So if you actually want to grow faster than that, you need to invest in something that has secular growth that is a higher percentage than that. Just so happens that Bitcoin and Ethereum are really the highest growing financial assets, more or less right now, for a size to growth ratio anyway. So what we can see here is that these are the economic and liquidity cycles that happen. And so you have cyclical prices, secular growth. So you have to take advantage of cyclical prices as they come down to invest in secular growth. So as you can see here, each cycle for Bitcoin, you have the Dixie, which is the dollar index. You have the Chinese 10-year, and then you have the high yield spreads. So all of this just means cycles, right? So you see the cycle here, and then it comes back down, another up cycle and down, up cycle. That looks like it goes perfectly with Bitcoin cycles over time. We've just entered the crossover here to a new up cycle, which is why Bitcoin is catching a bit as well. So take advantage of cycles where you get drawdowns and buy secular growth assets. Is crypto secular growth? Yes, it is. Bitcoin active addresses are around 30% higher now than this time in the last bear market. So 30% growth in active addresses over that cycle between bear and bear, which is obviously very important. 30% growth is a lot more than the 1.5% growth you get investing in stocks. POS, crypto ecosystem, proof of stake assets, you can see active addresses here are just grinding higher. So you have secular growth in this asset class, and then you have cyclical prices driven by the macro. So you can take advantage of that buying during downturns into secular growth, so you have the confidence to invest when prices are lower. Because if you don't have secular growth, you're going to be buying something that is trash, that isn't growing. The price has gone down and won't go up again. So maybe Bitcoin isn't for everyone, but it certainly has much higher growth, and traders can use cyclical prices to actually take advantage of that. Of course, Bitcoin and crypto isn't for everyone. The volatility is just so high. Everything's very unpredictable. And the ETF applications have really pushed us higher. I don't know what's going to happen in the middle of August. I suspect a delay just to see what will happen, and we may get some weakness here. But like I've showed you with the cycles, as we're going into the next cycle, I do see that as opportunity. I am buying dips. And for short-term trading, this is obviously way more risky, but there are some opportunities here as well. If you want to check out the Crypto Investor course, it's linked in the description. I'm going to be updating it for free very, very soon with all of my latest research. Check out the Bybit deposit bonus as well, link in description. I'm James, it's Money ZG. Cheers for watching, and I'll see you in the next one.